And on Tuesday, the UMBS were up 9 basis points. By the time the West Coast got up and got moving around, that was down about a quarter from the high of the day, which was real early. The Employee Cost Index is an economic report that was never really on the radar as a top-tier market mover in the past, but ever since Fed Chair Powell started calling this report as a source of guidance for potential wage pressures, we've seen much bigger reactions. So the ECI came in at 1.0 versus a 1.1 forecast. It was 1.2 previously, so it shows that employment costs are coming down a little bit. Q4 wages and salaries came in at 1.0 versus a 1.3 forecast. So that is something that could help stave off inflation a little bit. MBS initially lost almost a quarter point at the same time, and Treasuries lost ground. Markets have been dismissing Fed members talking about raising policy rate above 5% and holding it there through all of 2023. The big question for this week is, will that change? Expectations are already in place that the Fed will be hawkish, and that Fed Chair Jerome Powell's press conference will reiterate the message that the Fed will stand strong on its quest for 2% inflation. Home prices fell 0.1% month over month and rose 8.2% year over year, which is actually a pretty strong number. According to the FHFA House Price Index, the West Coast is experiencing the biggest slowdown, followed by the mountain states. Some of these MSAs, like Boise, became completely disconnected from the local economy, and prices will almost certainly contract to what the local economy can support. Home prices fell 0.5% month over month, according to Case-Shiller. The FHFA number only indicates on loans that are within the conforming limits, whereas Case-Shiller includes jumbo. November 2022 marked the fifth consecutive month of declining home prices in the U.S. The national composite fell 0.6% for the month, reflecting a negative 3.6% decline since the market peaked in June of 2022. We saw comparable patterns in the 10 and 20 city composites, both of which stand more than 5% below their June peaks. These declines, of course, come in a very strong price increase in 2021 and the first half of 2022. Despite this recent weakness, the year-over-year basis for the composite is up 7.7%, which in the 74th percentile of historical performance levels. Consumer confidence fell in January. According to the Conference Board, consumers were less upbeat on the short-term outlook for jobs. They also expect business conditions to worsen in the near term. Despite that, consumers expect their incomes to remain relatively stable in the months ahead. Meanwhile, purchasing plans for auto and appliances held steady, but fewer consumers are planning on buying a home. Dummies. Consumers' expectation for inflation ticked up slightly from 6.6% to 6.8% over the next 12 months, but inflation expectations are still down from its peak of 7.9% last seen in June. I don't think people realize those are really big numbers. The U.S. economy grew 2.9% in the fourth quarter of 2022, down slightly from 3.2% in the third quarter. In 2022, GDP grew 1%, a pleasant surprise given the negative growth in 2022 quarter one. However, stripping out inventory changes, net trade, and government spending to get at the underlying sustainable growth trend, GDP grew at an anemic 0.2% in the fourth quarter. The labor market remains surprisingly strong, but rate hikes will continue to make themselves increasingly felt in the 2023 progresses. At the end of the day, we ended up being up 13 basis points at 100.5. This bold red line that has been serving as a real strong ceiling is at 101.671, so we're in the upper third of that range. The range is a very narrowing one. It is getting even more narrow because the floor is a convergence of the 25 and 50-day moving averages, and then we even have the 200-day moving average coming down as a new ceiling that could possibly collapse on top of the other one. Redfin put out a piece about how the housing market is beginning to recover. Those in luxury properties are unpopular, but smaller properties that are well maintained in good school districts are moving quickly. Buyers are out there, but they're making low offers and asking for concessions. They don't seem ultra committed to the homes like they used to. If they write an offer and they don't get exactly what they want, they're happy to walk away. Also got some interesting stats here for all of 2022. United Wholesale Mortgage transferred $98.8 billion worth of bulk MSRs, more than any other non-bank. So this shows that with originations slacking, they're making up the money by selling off these MSRs, but that will be a finite amount, and that is a lot of MSRs. Also from our sponsor, we got the first in a series of posts. This is learning to write sales copy. So it's all about copywriting. So if you're going to put things on the internet, like the ad you probably saw for this blog, you better know how to write sales copy and make it compelling. And this series will teach you how at WellThatMakesSense.com.